Hi again, this is Rick with AmazingAccuracy.com. Today is February 21st, 2014, and it's currently 5:59 p.m. Chicago time. What I'm going to go over real quickly in this video is simply support resistance. In this case, actually resistance, because I'm just going to give a quick demo on this Australian chart and want to demonstrate that every swing top, every swing bottom on a chart has a reason why the price stopped dead at that point. There is an underlying reason, and if you can discover that at a time when you're expecting the market to reverse, such as using F-date turn dates, which is what we use, or if you have any other way of calculating a reversal date, also having a resistance or support at that price bar location goes a long ways in timing a trade. So let me just go right into this, okay? Now, starting off the top here of the Australian dollar, prices started moving down. At one point, it started it made a swing bottom right here and started moving up. So now that we're looking for the market going downwards, for example, because we were expecting a weekly swing top here and prices have gone down and confirmed the weekly swing top on the weekly chart. So we're looking for a place to sell. Prices start rallying up. We're looking for somewhere between here and here for prices to stop rising, where we can get the best location, best price to sell this market. When you're dealing with the Australian dollar, what I find really works good is the Gann retracement levels as opposed to Fibonacci retracement levels for the static levels. So for example, I'm applying Gann retracement, and right here we can see immediately that price stopped dead at 37.5% of this move down. It moved back up 37.5% of this overall move down. So that worked out really good. And if you were expecting a turn at this time, you would have not only resistance, but you would also have time. Now, going from here, prices are moving down again and makes another swing bottom. And prices rising up. Now you might, again, apply the Gann ratios, but you see it did not pick it up here. Not exactly. It just fell in between two levels, which that is so subjective. What are you going to do with it, right? But this is where you need to understand that there are more than one way of determining support resistance. For example, another useful tool that I use is dynamic fib ratios. And what you do with that particular tool is you look for the lowest close in the area here, for example. Since we're dealing with prices moving up, I need to use an inverted V formation prior to that move up to apply this tool. So you have to pick the lowest low, which is right here, and then the two following swings like such, and then go over to whatever time period you're looking for potential resistance. And you can see here, for example, that we hit exactly 50% dynamic Fibonacci resistance. Okay, so that was great. So we know that there was a reason why prices stopped here. Then again, prices moved down. We ended up with a non-trading day here. This was during the Thanksgiving weekend. And so I have no idea where to anchor any resistance support tool. I can't use retracements because I could use a low here, but is that a valid low to use? Or if there had been some trading here, where would the low have been? So anyway, you're kind of like at a loss right here because of a non-trading day. You certainly could apply whatever you want. I already happen to know that there was nothing that I could use that would pinpoint that, so I'm not even bothering because I just had nothing to anchor to. But then price continued down again, and as it moved up, we can easily see this one. We can eyeball this one because it's 100%. Okay, it just made a double top. So that's a 100% retracement. You already know that previous tops are resistance and previous bottom is support. That's easy. Okay, that's basic technical analysis 101. So, you know, if you feel like I could just put a trend line there, and you can see, you know, see what I'm talking about. Okay, so there was resistance there. Okay, continuing on, price is continuing down again, comes to here, it's starting to move up. First thing, what do we do again? That's right, we apply the Gann ratios to see if that's going to help us. Okay, we see at this time that Gann ratios doesn't touch anything, but we don't just wait for it to do that. We also want to apply the dynamic fib ratios like we did last time. Again, we need the lowest close in this area right here, and that happens to be right there. And then you go to the high, you go to the low, and then over to the area, and you can see it nailed resistance there again. So we've seen a couple of applications here. We've seen static Gann retracement ratios and dynamic Fibonacci fan, where you anchor from the closing price, the lowest close of your beginning anchor before applying. As you can see, that's where the fan is coming off of right here. Okay, so I hope that helps you see that you know, every swing top and bottom is at a support and resistance location. All you basically have to do is anticipate where those levels are. A couple of simple tools here to help you, especially in the Australian dollar. Thanks again for watching.